in that vein, I remember a story when I was a kid of, back when there were cameras that actually had film in them.
Right.
Let's just say a relative of mine who shall remain unnamed went to a wedding and just took a voluminous amount of pictures,
Oh no.
forgetting of force ever to put the film in the camera.
Oh
Didn't
my.
realize, because back then it was 12, 24, 36.
Right.
So
Right.
you kind of knew how many you had and just forgot and took no pictures of anybody at the wedding. Anyway, we
Oh.
won't do that. We won't do that tonight. Anyway, so there's a lot going on. And last week was really hard to focus on one particular thing, but let's focus on money and funding. I
Yeah.
think this is going to be something we will continue to talk about a lot.
There's a lot of
Uh,
activity in Asia right now.
a lot and a lot, even outside of Asia, focusing on Asia. And that is really what I want. That's really what I want. And I can tell you some stuff as we go along.
Yeah, let's do it.
But new funds and the thing, as you know, I'm in the process of trying to raise a fund as well. And as I always say, the pie is not, I'm not trying to take a piece of the pie away from anybody else. The pie is just getting bigger.
Hmm.
And when I see new funds, either existing funds starting another round or new funds just coming into the market, I get really happy because more money means more investments, and more investments mean higher valuations for companies out here that are doing the right thing, and that
Yeah.
cannot be bad. Just cannot be bad. We're not anywhere close to the bubble that's going on in the United States. There's no bubble in Europe, obviously. But the more people that are paying attention out here, the higher valuations are for really good companies. So let's talk about it, and
Let's do it.
let's go from small to large,
Mm-hmm.
right? And I don't make a value judgment about size. We have some very impactful funds out here that started smaller. Let's just talk about one of them, Golden Gate Ventures. Their first fund was kind of a $10 million syndicate style fund. They invested in some of the best companies in Southeast Asia, and their track record over a 2 to 3 year period of time has allowed them to raise a much larger fund. That's not necessarily in the news this week, but it's good context for what happens if you actually do a good job in a small fund.
Hmm.
So go ahead.
Yeah, I mean, there was always that thing in the 80s, wasn't it, with venture capital, that the bigger the fund, the bigger the return. There was that sort of macho approach to VC. Are we sort of seeing a change in that?
Yeah, and I mean it's a good question, and I was actually having this conversation today um, with a company that I was trying to help fund, and they said because we have a commitment now to fund them, so we were all very happy over the last couple of days, and there's more and more interest in this particular company. Anyway, they did ask the question, what is the percentage of companies that actually get funded that then go on to fail?
Hmm.
And I said it's a loaded question. If you look at, pick your least favorite venture capitalist that makes the most investments, and they believe that somewhere between 80 and 85% of their companies will fail.
Hmm.
But if you look at something like Benchmark Capital, five partners, very egalitarian company. Everybody has to agree if they're going to invest. And if it's your idea to invest in a particular company and that company makes money, and the four other partners make no money that year, everybody splits equally. So there's a real support system, and it's small. And they have not built an infrastructure like Andreessen Horowitz. And what that means is that they can focus all their time and energy on building these companies. And to answer your question, they don't do multi-billion-dollar funds. They do smaller funds with the idea of we don't want to make as many investments, and we believe if we don't make as many investments, we can have higher returns.
Right.
When this article was written about them about a year and a half ago, it said that they have returned over $22 billion to investors, and that they've returned on average about 1,000% to the people that have invested in their funds. The point is that size, in my mind, is a detriment, right?
Hmm.
There's an optimal size, and the bigger is not always the better, particularly from a return perspective. And I think as you get much, much larger, you just lose track of the things that are in your portfolio, and now you're operating in the realm of hope. And I don't operate in hope; I operate in facts.
Right.
So
Yeah.
yeah, I don't think that's happening here yet. I think, sure, you want to have, and we've spoken about this before, I think you want to have a fund ideally that can follow on. So if you make a good investment, but for some reason in the 1 to 2 years in which your company is growing, when it comes out of that when it comes out of that sort of into the Series A phase and it needs to have capital like growth capital just to grow, if for some reason there's a crisis or some kind of financial thing going on in the world that has nothing to do with your company, it's good if you have money left over to follow on with.
Hmm.
And that's why slightly bigger is better than slightly smaller. But you have to start somewhere. And for these teams that go out and raise $5 million to $10 million, good for them because that is hard.
Yeah.
particularly if it's their first fund. So I know this guy, Hajime Hota, and I did not know he was working on this, but he has launched a $5 million pre-seed fund, and he's going to focus on Vietnam. There's not a lot of focus from people external to Vietnam on what's going on there.
Hmm.
The name of his fund is called Innovatube. I'm not sure that's a great name, hard for me to pronounce.
Hmm.
But Hota-san is actually a really great guy, and he's quite famous or well known in Japan, along with his ex-partner, whose name is Miku Hirano. And this was actually in the news unbeknownst to me, so it's not like I'm shrilling for this team. I don't even know if she's involved, but the two of them have just done some really great stuff together. Depending on how much people know about the ecosystem in Japan, the two of them started a company called Naked Technology. And this is back in 2006 or 2007, and they sold it to Mixi. And Mixi is one of the pioneers in the online sort of social networking space. They worked there for a little bit, and then they both went out and started something called Cinnamon as well. And now they're working on separate things. But the two of them are quite famous and well known. Hirano-san is more likely to build companies, and Hota-san is actually more likely to be an investor. So it's interesting that they've actually split this up. But he wants to invest in sort of seed stage companies. He feels like he's very good at this. His partner is also a serial entrepreneur. And they're focusing on Vietnam with the likelihood or the possibility that they'll also invest in the rest of Southeast Asia. And it's just good for the ecosystem. Full stop.
Is it usual for entrepreneurs like that to go and start up a fund and go and invest in a growth market? Are we seeing that as a precedent, or is this sort of a new development?
No, we definitely are seeing it. So if you look at Monk's Hill Capital, run by a guy named Peng Ong, Peng is a Singaporean. He's one of the pioneers, I guess, in this ecosystem as well as an investor. He runs an $80 to $100 million fund, so one of the best and one of the biggest funds in Southeast Asia. And his background was helping to start an online dating site in the United States. So the name escapes me, but I can find it pretty quickly. But Peng was really famous for Match.com. Sorry. So he was part of the team that helped Match grow and get built, and also when it got listed on NASDAQ, or I think it was actually sold to IACP. I don't remember exactly. But he was very prominent there, and he said, I want to give this experience, the Silicon Valley experience, back to entrepreneurs in Southeast Asia. And he came home, and one of the interesting things about him, so his fund, Monk's Hill, has been around for 2 or 3 years now. And he's invested in some very good companies, not just locally, but globally. But yeah, I think he's started this trend of entrepreneurs coming back and sort of giving back to the system, right? And he's been very good at that, sponsoring events, mentoring people, and investing in companies that may not have otherwise been invested, but have grown really nicely. One of them is a company called PlayLab, which has been one of the most successful mobile and online game companies in Southeast Asia. So yeah, I don't think that Hota-san is actually starting this trend, but I think it's really positive for an ecosystem when the entrepreneurs who have made money from other people's investments kind of give back by starting their own investment funds.
Right. Are they going in as investors, or really with that sort of altruistic approach? I mean, if they were to go in and build an ecosystem but lose money, would they be happy?
I don't think so. It's a good question. It's a really good question. And it depends, right? And I heard somebody talking about this in the movie space today, but I think in the sort of tech startup space, I don't think there's much altruism to be found.
Yeah.
Right. I think it's different. And we saw this a few years ago with a company called Color. I forget who the founder was and who the investor was. We talked about this too. That particular founder had made money. It was for Sequoia, or I forget who it was, Kleiner Perkins. I can't remember. And he came back to them with another idea, and they just gave him $40 million to run with because their returns with him had been so high anyway. I wouldn't necessarily call that altruism, but I'd call that like friendism. I don't know what the right word is, but you know what I mean, right?
Yeah, right. But I guess when you're in, like with Hota-san, you're in that position where you have a lot of choices. You can decide what kind of investments you're going to make. You're going to invest in something that you feel passionate about. And if he's going to go to Vietnam and help build the ecosystem, that's something you can get excited about, right?
Very, very. And his specialty, he's a developer by training. He's an engineer by training.
Right.
So he also feels like he has a lot of experience in the mobile space. And mobile, basically, everything's mobile first in Southeast Asia. And he feels like he can help people understand how to deploy capital. So yeah, he can get very excited about it, and he can be really passionate about what's going on in Vietnam because he does see a lot of growth there. And again, to be fair, there have been a few very successful companies in Vietnam started by Japanese entrepreneurs.
Yeah.
So he feels comfortable there. And for a while, his business partner, Miku Hirano-san, I think lived in Ho Chi Minh, I believe, but lived in Vietnam and was starting one of her companies there. And one of her other companies just got funded as well.
Hmm.
So she's been quite prolific. Her most recent company is called Recor, and it's funded by CyberAgent, which is Japanese, TBS, which is Japanese, Incubate, which is Japanese, and then the fund I was talking about earlier, Golden Gate Ventures. So she is one of the most prolific, and I hate this, but she is one of the most prolific female entrepreneurs.
Right.
And I like the fact also that she's Japanese. It brings a really international flair to what she's doing in this region. She's really good. I've met her in person. She's very charismatic, very like exciting, and also deeply creative and a great entrepreneur. So yeah, she's very good for the ecosystem as well. But Hota-san started a fund, and I like it a lot, actually. Sorry, go ahead. I
Hmm.
interrupted.
No, you didn't. I mean, I'm excited by this story because I wonder if, I mean, like Hotta-san and, those kind of entrepreneurs, whether they need to go to places like Vietnam to kind of get that raw entrepreneurship that they're looking for, right? That maybe they can't find that at home. And this kind of entrepreneur needs to go out there and, go to the frontier, so to speak, and work. I know they've chosen some pretty cutting edge technologies as well that they're going to work with in that fund. They're talking about VR, IoT, AI. They've not just gone to Vietnam and said, right, we're going to invest in Southeast Asian companies. They've had a
Right.
specific remit, right, which is interesting. I suppose that's kind of
No,
refreshing as well, right?
it's very, very interesting. And you make a super good point, and that is Hota-san, why wouldn't he just do it in Tokyo?
Yeah,
And Hirano-san, why would she move to Ho Chi Minh and not move to, Fukuoka, which has a relatively robust
yeah, right.
interest in startups and technology? But instead, they both came to Southeast Asia. What does that tell you about the ecosystem in Japan? And, we talk about that connectivity a lot and that
Yeah,
comparison. What does it tell you?
I love it.
Yeah, I love it too, because it fits into my thesis, but I feel sad for Japan
Right.
because it could use this. It could be so great.
But then you're fighting fundamentals. I know we've gone into this in the other episodes about it's a declining population. You've got less and less young people, etc., etc. And you can't fight that, can you? You've got to go where you've got to mine where the gold is, and they've got to go to places like Vietnam and Thailand because that's where it is for these guys.
Yeah, and again, the Japanese have been some of the biggest foreign direct investors in the region forever in industrial companies, and they're just continuing that trend in technology and startup
Mm-hmm.
companies and investment companies. And again, the Incubate Fund has an office in Singapore. That's their base in Southeast Asia. CyberAgent Ventures has offices all over Asia, but one of them is in Thailand. Another one is in Vietnam. I know those guys really well. And TBS, I believe this is the Tokyo Broadcasting System.
Right.
I don't know their team, but they've made an investment in a company that has nothing to do with Japan per se. So good for everybody, I think, in this.
Yeah, more of it.
Much more. So let's move up the
Let's
size a
do the
little bit.
next
I
one.
don't want to
Yeah.
say, yeah, I don't want to say up the chain necessarily, right? But now you're talking about Kajora Ventures. So Kajora Ventures um, is a team that wants to start a fund um, here. It's raising, they say, about 80 million US dollars. They've already raised about a third of it. They've spent almost all of 2016 doing it. And they're what they say 16 of the funds are through their idea box program.
Hmm.
So this is going to be something that takes money from high net worth families in Southeast Asia, Europe, and in Hong Kong. But again, a bigger style fund, right?
Hmm.
And their background obviously comes out of private equity, investment banking, and entrepreneurship. So this is more of a standard style fund, but it's good to see that they're also having the ability to raise a much larger fund, and they're going to be able to do things like follow on in a way that the smaller funds won't be able to do. And they really want to focus on, as they say, right, so building sustainable businesses in this region, and they're going to help people focus on that. But again, really, really good for the ecosystem for size, right?
Hmm.
And again, helping with. We spent a lot of time last year talking about how the investment ecosystem is maturing but not mature yet. And I think the larger size funds like this, particularly with the background and experience of this team, is going to help bring a little bit more maturity to the investment process in this region. And, for a company that has operations in, what is it, Indonesia, Singapore, the Philippines, and they just recently opened an office in Thailand as well. I think you're talking about adding just more power and more experience to the ecosystem. It kind of fits into everything that we've been talking about. And I like that quite a bit.
How are these guys different to what's already out there, Kajora? I mean, what do they sort of bring to the table that we don't have already in Southeast Asia? Why did you pick this piece of news? What excited you about it?
Well, I mean, first of all, the size, right? And the fact that this is their second fund, not their first fund, right? So in the first fund, they were only investing around $1 million per company. They're going to invest about 2 to 5 in this. So everything they're going to do is bigger. They're going to invest across the whole spectrum, right? Which they can do everything from what I call seed to Series B, which is really good. Most funds in the region can't do that. They pick a part of the investment curve where they're going to invest, and these guys want to do the whole thing. I really like this a lot. And they're also what they call sector agnostic. What does that mean? It means just show me a good idea, show me something that's going to grow really big, and show me something that's going to take advantage of all the growth dynamics in the region, and we will consider it, and we'll consider it at any stage of its growth, right? And it's getting to be a little bit of a cliche, but they are focusing a lot of their investment, and I heard this today as well, they're investing in people, not in necessarily business ideas, right? So they really want to invest in people that are passionate about their ideas in the company and not people that are necessarily trying to just take advantage of something that they think is trendy or, really current and hip. They want people, as I like, that are looking for big market gaps and going to fill those market gaps and are really passionate about filling them. So that's really good. And their focus is going to be doing something I like a lot. That is, you're going to start early stage, and you're going to build in and follow on into later stage companies. And there's nothing like that. That's super helpful, I think, for any ecosystem. And the fact that they're going to do the whole curve is actually really important to me.
Right. And they've mentioned that word sustainable. That's come up quite a bit recently, hasn't it, in these conversations? Is that sort of, or is that VCBS or is that genuine? What are your thoughts on that? Because it's kind of a bit of a buzzword at the moment, building sustainable companies, sustainable ecosystems. What's your thoughts on that? Is that genuine?
I think it's really, really genuine. And again, it depends how you define the term sustainable, right? And I think in this case, I think everybody wants to build a company that lasts for a while, but I think what they're really talking about is investing in sort of the overall sort of catch-all phrase of sustainability, right? Which is a very different metric. And I don't think it's just VC speak at any level. As a matter of fact, I think what venture capitalists are realizing is that they have some social responsibility as well, that they're just not only investing for a financial return, but they're investing for a greater good and investing in companies that have a sustainability avenue to them are really important. And I'm sure I've mentioned this before, but I'll keep mentioning it. We see a lot of people talking about not just sustainability, but sort of socially responsible investing.
Right.
And it's more than just like CSR. CSR is really easy for big corporations to do, right? They have a department, they allocate $2 million to it, and it's just like buzzword speak. I'm not very impressed. But when investors are taking money from limited partners and convincing them that they want to invest money into companies that are focused on that type of sustainability, I think it's really important because they're doing it from the beginning. They're not bolting it on actually in the middle or at the end of this process. And I think that's really differentiating and really important.
Yeah. So they also, I don't know if it was the Kajora guys or the
K2
Yeah. So, I mean, whether it was them, but in one of the articles they mentioned about focusing on companies that solve problems for big populations, and that's sort of in this ballpark, isn't it? Where they're dealing with problems that are specific to this region as well. And we're sort of going back to many of these conversations we had. And I know you're big on infrastructure and how you like these startups that are involved in building out this sort of fabric, the technological fabric of these societies, and that's sort of an exciting area. And I wonder if that's the kind of thing they're going to be looking at as well. Whether that it's building out the physical infrastructure or technology infrastructure or whatever. It's something that's needed to make society progress, right?
Absolutely. And again, you have super high opportunities to do well by doing good out here. And I think it was the Kajora team who said, we want to invest in companies that are solving problems of a big population, right? They want to target these companies that are highly scalable and where the financial returns are commensurate with that high scalability. Um, and in that case, they're willing to put a decent amount of money in because, again, they feel like they're doing something good. And by doing something good, their investors get to have a good return as well. And I think you're going to see a lot more of that, right? I mean, in the same way, and I'm not sure that there's a huge equivalency here, but in the same way that Southeast Asia has kind of skipped, for the most part, sort of the desktop internet and moved directly to mobile. I think they're moving right on to a sort of sustainability and social responsibility, even before the investors themselves become billionaires as a result of their investing. Like, I don't think it's too hard for a very successful investor in the United States after making a lot of money to then say, I think right now I'm concerned about sustainability. But also
Mm.
remember, you're talking about economies in different states of development as well. So you can't really, I don't like the word blame, but you can't really point out sort of the deficiency of the investing style that was in the United States in the 80s and 90s and actually early 2000s, because they really only had to work with what was going on in the US. And at that point, there was already focus on, clean air, how to, low fuel consumption, solar power, nuclear, all these things that were sort of pointing towards sustainability, but might not have had like a name yet.
Mm.
But in Southeast Asia, these economies are really in a growth stage, and all of those things matter. I mean, even China, I think it was a couple of weeks ago, said they want to become the largest solar power producer and renewable energy producer in the world because they're
Wow.
realizing that they did, and they're realizing that all the sort of coal-fired furnaces that they're using are creating
Yeah.
pollution that even they don't like,
Right. It's
right?
unsustainable, right? At the end of the day, right? At the end, if you look at the pollution indexes in these cities, it's unsustainable.
It is unsustainable. The people don't like it. The governments themselves don't like it. And I always say this too when people complain about what the development environment is like. I'll just say in Asia as a whole, they forget what it was like in the late 1800s and early 1900s in the United States
Exactly.
and earlier in Europe as the Industrial Revolution was happening there. So it's very easy to put your finger in the air and say, the people in Asia and Southeast Asia don't care about the
Right.
environment. But
Yeah.
they're in the same stage the people in the U.S. were in the late 1800s when the Industrial Revolution was happening there.
Exactly. Different
So
priorities.
yeah, never mind is
Michael,
the way.
one question I wanted to ask you, and as a just educate me about this is I know you mentioned that with Kajora they were raising a lot of their capital from high net worth families across Asia, and I wonder, does that affect the kind of investments they can make, and also, I mean, how does that compare to the US, for example? I mean, do we have that kind of scene there?
We did. I think what you find is that a lot of institutions in the United States, right, so have been investing in venture capital sort of for the last two rounds, right? So in the early days, in the 70s and even in the early 80s, you had the same type of thing. Very wealthy ex-industrialists or ex-successful technologists would say, I've made all this money. How can I turn this money into more money, right? I'm wealthy, but I'm not rich. How can I get richer by investing my money? And they pooled their capital into these sort of venture capital um, vehicles. And I think you're seeing the same thing out here. Now in the United States, these have become much more institutionalized, right? In the same way that Harvard runs one of the largest hedge funds in the United States, Harvard
Right. Yeah.
University. It's likely, and they call those alternative investments, right? So it's not investing in stocks or bonds or real estate. It's just alternative. And they're beginning to allocate percentages of their endowments and just their assets into these different investments. And I think we're at the stage in Southeast Asia where the high net worth individuals are saying, we've had a packaging company or we've had a milk and dairy company or a beer company for two generations. But if we're going to sustain that wealth into the foreseeable future, we're going to have to take some of our available assets and invest them in ventures that we either A, don't understand, or B, are riskier than has been common for us up until now.
Hmm.
So to me, this is not a very big surprise. And what will happen is they'll create more wealth. And as the middle class gets bigger, they'll save money. Crowdfunding will happen the same way it happened in the United States. And then you'll see a different sort of investment scene develop as a generation of funds, not necessarily a generation of people, but a generation of funds raise their second tier and third term funds, and you'll see a bigger swath of people kind of investing in them. But yeah, for now, I think it's going to have to fall to these high net worth individuals and really, really small kind of SMEs, or actually larger SMEs that have excess capital to invest. Did that answer your question?
Yeah,
Does that
yeah.
make
I'm
sense?
just curious because it seems like that's a, I was wondering whether they're plugging the gap here in Asia as a result of the institutional investors not stepping up to the plate, so to speak. And whether that was the result of that, and also just curious as to how that would shape the investment scene as well. What kind of, does it give them? I mean, if you were the son of a wealthy industrialist, you might have a bit more bandwidth to take risk or to do things or to get involved with this stuff. So I'm just wondering whether that would change their outlook on the kind of startups they would invest in, rather than ones that just produce a good return. They might be interested in one that actually, had some kind of net benefit to society or sustainability, that kind of thing.
So I've actually seen things that fall into three large categories. Okay. The first category is the one you just mentioned, the son or the grandson of a wealthy kind of industrialist that wants to take a little bit more risk, and their father or their grandfather, because in most cases, these are male founded companies. That's not my fault. It's a fact. Gives them permission to risk $5 million without worrying about return. But that's a small population. And I think the next two are kind of evenly split, where the sons and daughters of the industrialists will go to their parents and say, look at what's going on in the United States. Look at the amount of companies that are trying to get started in the startup world, particularly in technology, something about which we know nothing, but which we know is going to be significant going forward. Can you give us some money to invest in this? And we'll manage it for ourselves? Because what we don't want to do is we don't want to give it to a money manager. We don't want to pay 2% fees, and we don't want to give somebody 20% of the carry. We've been educated overseas, and we think we can manage this money for our family better than somebody else can manage it for ourselves. So it's not really a family office per se, but it kind of feels like a family office. They take, and they have to spend some time taking a little bit more risk for their families, but they're happy to do it, and they've convinced the previous generations that, look, this money might go away, but what we're doing is we're paying tuition, and we're setting up for the next round. I have had Japanese people say this to me as well. We want to put $2 million into Southeast Asia. We don't care if we make any money. We just want to learn. And the only way to learn is to be in the game. And I've seen that. And the other category, which is slightly larger than the second, but much larger than the third, is this generation of kids get some money from their parents, and it can be significant. I'm talking $50, $100 million, but they only want to invest in companies that mirror what's already been successful in the United States or from Silicon Valley. And I think there are multiple reasons for this. One is they're really, really risk averse, and while they've convinced their families to give them money, they haven't convinced their families that that it's okay to take the risk, or that they'll even be good at managing that risk. Okay, so if something goes wrong, they can say, well, a company like Stayzilla, which is Indian, but is a decent enough example, worked in the United States. That's the Airbnb model. I take people that aren't proper hotels but have extra rooms, and I create a business that's going to let them stay there, but it has a local flair to it. If we invest in that company, we know it's a multi-billion-dollar company in the US. It should be out here as well. That's the type of stuff that they invest in. And then when it goes sour, like Stayzilla did, because it announced that yesterday or 2 days ago, the reaction from the family is probably pretty negative, but the reaction from the next generation investor is probably something like this. Look, it didn't feel that risky to me because it had already worked. Right? And to me, that's the worst kind of investment, because you're not investing for any other reason except this has worked before. And I don't think that's a good idea. But those are three sort of really large categories. And I've spoken to people in all of those situations. So I know that for a fact, yeah. And I think it's going to take kind of one round of investments for people to actually understand what it means to be a venture capitalist. Because this is the other conversation that I've had as well. You can invest your own money in a business that you already understand, right? So if you're in the beverage business and you want to create a new beverage or invest in a beverage company that's separate and different from yours, you're probably going to be able to add value and be able to help out. But if you're going to invest in a logistics business that's creating cutting edge technology, you may not have the expertise to understand that. But you'll miss that investment too, because it won't make any sense to you why that warehousing business is different from another warehousing or logistics business. But if somebody was managing your money, it might be worth the very small fees that you're going to pay them to actually make money on that, because in the end, it'll actually help your industrial business, your beverage business, by having the best warehousing and logistics, which is a winning formula, by the way, for any business. Right? I mean, that was the whole, Walmart did this twice, right? In two places. One, it helped them with their suppliers and lowering costs. But two, they could out logistics any offline business. It was one of the things that made them so successful in the United States.
Right. Exactly. Same with Coke as well. I mean, they got Coca-Cola Enterprises, which is the huge logistic monster that, makes the whole Coke show flow, right?
Yeah, yeah. I mean, their bottling business is very profitable. They're obviously their drink businesses and snack businesses as well. But yeah, for sure.
Right. What else have we got? What other stories are out there in the
Well, we
news?
missed the we missed the last one, K2, right? K2 Global. This is a venture capital firm. They've got headquarters in Silicon Valley and in Singapore. They're the biggest of the funds that have announced over the past week or so. They're talking about almost a $200 million fund. And they want to do something. So what's the differentiating factor here? Well, the other teams want to invest locally, right? The first one was smaller, wants to invest in Vietnam as its main focus. The second fund, the Kajora team, wants to invest in the rest of Southeast Asia. But what K2 is saying, and this is also interesting, is we want to bridge the gap between Asia and Silicon Valley because we want to have impact on a global scale. Like, you listen to a lot of these companies talking. I'm telling you, I listen to this from a very different perspective, but I heard somebody interviewing, I wish I could remember who it was, but interviewing somebody yesterday on a podcast about how, they flew to Boston from California to talk to somebody about a business, and that then the business expanded to Atlanta. And I just thought, that's really great. But when is that business going to expand to Jakarta and to Bangkok and to Ho Chi Minh and to Manila? Like, I have no idea.
Right.
It didn't even enter into their conversation. And these are like well-respected journalists, venture capitalists, startups. Oh, I remember who it was. Anyway, it doesn't matter. But the point is that they didn't even think about it. But this company, K2 Global, is saying, here's what we're going to do. We've already invested in companies like Magic Leap. We've invested in Spotify, which is a European company, Twilio, and in Uber. And now what they're saying is they want to do multiple things, right? They want to be positioned to take American companies into Asia. So they want to do kind of like a market entry business at scale, which is really interesting. They want to take Asian companies and bring them to the United States at scale, because there are companies in Asia that take a different tact on things, right? So like some of your dating apps, like Pactor, is different than Tinder. It has different things, and the Pactor team has been very successful out here in building sort of an online swipe left, swipe right business. And their idea is maybe we can bring some of that knowledge back to the United States. And then on top of that sitting on top of that whole sort of market entry business is they want to invest in companies that want to be global. There's no reason why they can't find a company that's getting built in Singapore or built in Ho Chi Minh or built in, Malaysia, that could potentially dominate in the United States. There's no reason why an ad tech company can't come out of this region and dominate in the United States, because, again, it's mobile first here, so their experience with mobile ads or location-based things could be better here than it is in the United States. And also their ability to understand multiple cultures and multiple languages and different time zones is much more well embedded here, because every country has a different language, a different culture, and potentially a different time zone as well. So what this business wants to do, and this is how it's differentiated from some of the other funds we talked about earlier, one of the reasons why it needs to be larger as well, is because they want to contribute to sort of the globalization and the at-scale investing, not just in one location, but in the whole world, and basically bridging Asia and the United States. Again, something we've talked about a lot here, and we haven't been able to raise our money, but kudos to these guys for this team to be able to do that. Yeah, and they're one of their mantras is they want to invest in third wave companies or third wave startups, right? Which they define as companies that challenge incumbent players. I'm not sure what that means. That sounds a little bit like VC speak to me,
Yeah.
right? But I think what it means is that they just want to take companies that are really differentiated, and they want to make them global. They want companies to look at building globally from the get-go, so they don't have to retrofit things on top of it. And the perfect example of this is a company like eBay, ridiculously successful, right, in each of its individual markets. But if you want to list something on eBay Germany and list something on eBay United States, it's really problematic.
Yeah, right.
Because they're not connected to each other. They're almost like separate businesses. And just getting it translated, like most people don't understand how sophisticated the back ends of these companies are, right? So just the descriptions of an SKU in Germany could be different than it is in the United States for the same product. So getting those things translated, getting the prices right, getting the currency fluctuations right, getting the logistics relationships right. These things are all really hard. So getting a fund like K2 Global that can bridge this gap between these two regions and then take those companies global, I think is really significant and also a big differentiator.
And that's exciting. I wonder as well, I mean, there is a sort of a larger risk at play here. I mean, if you were to take an e-commerce player global from Asia, I just wonder. I mean, let's say you were to take what I'm trying to get to, Michael, is I wonder if their position could they take a Flipkart and make them global with all their their challenges, and where you look at a player like Alibaba, and I know some of the partners have had backgrounds with Alibaba, who we're going to go global anyway, right? So is there a danger that you could take one of these sort of Asian e-commerce players and springboard them global and just burn through those $200 million in no time at all?
Yeah, I mean, I think e-commerce is a uniquely local, this is my opinion, right? And we've talked about this before. I think it's a uniquely local thing and regional at best, right? Because the purchasing patterns of somebody in Osaka are going to be very different than the purchasing patterns of somebody in Kansas City. They just are. And if you list the same products in the same market, they're not going to buy them. Fashion trends in Korea are different than fashion trends in Croatia. Right? And while some countries copy the fashion trends or the music trends of other countries, I just don't think that that's ever going to be global. And to be fair, I think if you watch what's going on in the world cyclically, I think those things are going to get more polarized rather than less polarized. Just an opinion. Okay, so e-commerce I think is not the best example for this, but I do think there are places, logistics may be one of them, where just having a global system that's interconnected, whether it's shipping or warehousing, I think really makes sense from an infrastructure standpoint if you can connect all those things, because theoretically there are trains, buses, water transportation, and road transportation and air transportation in every country, and connecting those things, and also seafaring vessels, right? But connecting those things all over the world has just been logistically very hard. And attacking that with software, which is what these investment companies want to do, I think could be very powerful.
So the big wins, or even the small wins with these guys, you're long on logistics. If you were to take an Asian company and take it global, the chances are that it would be in the logistics space rather than the e-commerce space.
I just don't think, here's the thing, like I said, I just don't think that an e-commerce business, look at how long Amazon's been building its e-commerce business for 2 decades or more, and they don't really do that much business in Southeast Asia, in China, or frankly in Japan. There is Amazon.co.jp, fair enough. It was one of the first sites that got translated into English, but I think it's dwarfed by Rakuten and by Yahoo Shopping, and even by some of the stuff that's done by GMO. I just don't think a lot of people who are Japanese shop on Amazon. Now, what has Amazon built, though, that is global easily is a business like AWS, all the back-end server stuff.
Exactly.
Because that's the infrastructure that everything runs on. So when I talk about logistics and infrastructure, I'm not just talking about hard goods. I'm not just talking about roads and planes and trains. I'm talking about the back-end infrastructure of the internet. And that has not been completely built out yet. I think every time a generation comes and says, well, there's nothing else left to build, somebody comes along and builds something else that sits on top of everything or that everything else has to sit on top of. And we can't conceive of it. If we could, we'd be doing that and not talking about it. So those are the types of things that I like. And that's my bias too, right? I mean, we talk about it a lot, but I do have a bias to that. But something like e-commerce, you see e-commerce companies in the United States start up and just fall to the wayside or get bought up really quickly, but they don't really turn into much. And I think those businesses, as I said earlier, are just uniquely local and regional and not. But what you will see, here's what you will see though, right? For certain categories, you're going to want to see people. There are two things going to happen. One, for certain categories, people are going to buy like cameras or cell phones or whatever. This stuff is going to trade globally. But you're going to have people make it easy and seamless to have products move from one market, or listings of products move from one marketplace to another marketplace really easily. I know companies that are building technology like this, and those companies are going to be huge because they're going to take a cut of every little piece of economic activity that takes place on the internet, because all of it needs to be translated, and that's never going to go away. So if you've got a seller in Japan who wants to sell stuff in the United States, they don't want to translate it, but they can just like list it once and sell it everywhere. If it's a global product, that's going to be, and what do I mean? I mean, I'm talking about everything from as simple as just like a pair of socks with Hello Kitty on it to a digital camera made by Sony. Right? Maybe somebody has a special deal or has used equipment or whatever, and they want to sell it in Japan, United States, and Russia, but they don't want to list it 3 times. That's a business I think that's going to be huge. And I know someone who's building that business too. But that's the style of stuff I think that's going to get built globally, as opposed to just pure e-commerce. And again, I was sitting in a coffee shop doing some work yesterday, and there was only one other guy in there. So being me, I just said, "Hey man, what's your name? What do you do?" And we started talking. And here is a guy who is a golf pro. Okay, so he teaches corporate executives in Thailand how to play and improve their golf game. Why do you care? Well, you care because on the side, he runs a factory direct e-commerce business that connects to products in China that he tests every day, and he's selling products to people in the United States that are just made in China. And he's pushing to them. So basically what he does is he finds out what their interests are on Facebook by what they like and don't like, what he sees them viewing, and then he pushes products to them that are categorized based on the things that they like. And he's seeing his business grow very quickly. That is like a really interesting way to do e-commerce. But those types of businesses can be invested as well. Yeah. Just to get back to the theme that you were talking about before, that I think is going to be really useful. And I think this whole concept of factory direct, we could talk about this on another show, but I think this whole concept of you're not going to a store, you're going directly to a factory that's being facilitated to buy a product. That's the future of retail, I think. And I don't think anybody really disputes that.
We're seeing a lot of interesting developments with that. I mean, if you were to take a flight from Bangkok an hour up to Chiang Mai or even over to Ho Chi Minh, there's a lot of guys who are doing this in very low-key businesses as, drop shipping businesses where they could be. I mean, I met a chap who was, running a large, well, I would say a 7-figure business, effectively importing, exporting furniture from China to the west coast of the US whilst working and living in Ho Chi Minh City. Yes. And on the face of it, he was a guy in a coffee shop with a laptop. Yes. But, and you think, wow, what these guys have discovered is a way of bootstrapping and growing a business very profitably. They've discovered the process. Now, all you kind of need, if you were to take that, is a little bit more capital, and you could have a very interesting business. And I think that's what really excites me. And I wonder that because they live in this sort of front line where anything's possible, the Wild West, so to speak, where they're out of all the, the paradigms of, Silicon Valley and stuff like that, where they're just these guys operating on their own. They can come up with these ideas, and that really excites me. And I wonder how much of that will filter through to the, the institutions and to the investors in the future. And who knows? But it's just exciting that they're coming up with ideas that you wouldn't even know until they actually walk you through their business that this was possible.
Yeah, I mean, look, it surprised me. And frankly, I said to him, "How big is your business?" He said, "Well, I did $6,000 last month. And I did of sales, right? and I did 3,000 of that in the last week. So it's growing, he said. And again, just getting back to your comment about can you do e-commerce globally? Remember, he's sourcing product in China and selling only in the United States. He's English, by the way.
Hmm.
So he's taking from the biggest manufacturing market with the best cost to value, and then selling it in the wealthiest market in the world to people that want to buy things at a discount. So it's a great, like you said, it's a great business model. And now the question is, can it scale if it gets invested? Super question.
And he's living in Bangkok?
He lives in Bangkok and he teaches golf. He teaches golf. I don't
That's
even know
good.
his last name. But
Right.
what was even more interesting, I said to him, "Why did you start this business?" He said, "Well, my buddy was telling me that he generates $1 million of revenue a year." And I said to him, "That's great, but what are his margins?" He said 30%.
Mm.
So here's a guy who like doesn't work for anybody, sources products in China,
Yeah.
does some testing, sends out targeted emails, so he uses a tool to do that, and he makes $300,000 a year post his expenses.
Yeah,
Now you tell me. My guess is that guy is not American. But you tell me, to which government entity is that man paying taxes?
yeah. Exactly. Don't ask too many
Just,
questions.
yeah, I didn't ask that question.
We got it worked
Uh,
out somewhere in Hungary. So I think
yeah,
the interesting thing is that, that if you think about these guys as well, if they're based in Bangkok, the burn time on that business is going to be significantly better than if they were based in California, right? So
for
they've got
sure,
a bit more leeway to take risk
absolutely.
and work it out, right? I mean, they may get double the burn time of a guy in California, which gives them double the time to make mistakes. So that's really
Yeah.
interesting, isn't it? I mean, that the fact
Well,
that if he was in a very expensive city and having to hire developers who would be very expensive as well, he wouldn't get a lot of time to go out there and test it out and work out what exactly it is that's going to work with his business.
absolutely. And he has all of his analytics on his iPhone 7 that's provided. And remember, he built his. I asked him. I said, "Who builds your front end?" He said, "I just use Shopify." So he's got a
Well, there you
Shopify
go.
front. Okay, and Shopify provides all the analytics. He showed me graphs and charts and data from stuff that was really impressive. And he was in a coffee shop on a side street. You wouldn't even have known like that he had any business at all. Okay, and frankly, the only reason why we really started talking to each other is because he parked his Vespa in front of the coffee shop, and I ride a Vespa as well. And I said to him a joke like, "What do you need a Vespa to get into this coffee shop?"
Hmm.
And that's how it started. And then in the end, I just wanted more stuff to talk about. So I asked him what he did for a living. And remember, it's 10 o'clock in the morning. So if he had like a full-time job, he would have been there already. But yeah, I find this whole concept really interesting. Really interesting.
Yeah, we're scratching the surface.
Yeah.
So,
Yeah.
right then, surprise this week. You are a man who likes to bring us a surprise every week on the show. What have you got for us today, Michael?
Okay. Well, that's a big surprise. And I think this company itself is going to provide a lot of that's a big surprise segments for us. I wanted to talk about something else, but we'll save that for next week. The real thing that I want to talk about was a company called Zalora, a rocket internet company that was started and funded with tons of fanfare. Fashion only, right? So not like its sister company, Lazada, which is really just a marketplace for everything. Zalora was meant to be a fashion company. It is selling off 49% of its Philippine business. It's getting out of its Indonesia business, selling for a much lower price than what it costs to build. And just this was part of the whole internet rush back in 2000, end of 2011, 2012, and 2013, and created a lot of fear actually in Southeast Asia. And a
Hmm.
lot of us sat on the sidelines and said, again, you can hire a bunch of mercenaries who have no passion for a business. You can pay them $15,000 to $20,000 a month to fly in and just throw money at fashion retail online. But in the end, this business is never going to succeed, and this is proof positive. Like, not a big surprise that this company is either A, going to go out of business, or B, is just going to have a lot of trauma around it, and its valuation is going to be much lower than whatever its last funding round was. And frankly, I haven't heard of a lot of funding for Zalora recently.
Hmm.
And I like it because the articles that we talked about were from a few days ago, February 23rd, February 24th. And in the ensuing days, the CEO of the company regionally said, "We're not getting out of Indonesia, or we're not selling our business in the Philippines." But whenever this happens, right, you
Well,
know that that stuff is true, but they're just trying to spin it in a way that's different. So that's a big surprise. Not really.
not really. But these guys had good backing. I mean, what's the sort of the batting average of an investor like Rocket Internet? These are the German VC fund, right? I mean, do they have a good track record compared to their peers?
It's a really good question. I mean, if you look at the two companies, well, the three, four, I want to go four companies that came to Southeast Asia with gigantic fanfare. So Zalora, not doing so well. Lazada, sorry, which was sold at 1/3 of its highest valuation price to the Chinese. You had Easy Taxi, which was meant to come in, big story about $40 million of global funding. Easy Taxi came in before Grab Taxi and before Uber. That disappeared very quickly. And then what is it, Food Panda? So Food Panda bought food by phone, and then they sold off all their businesses as well. So I don't know. Maybe their track record includes things in Southeast Asia of which I am not aware. But I will say this: there's not a lot. There's not a lot of love lost in the region. This is not me talking about me. This is me kind of looking at the lay of the land. There's not a lot of love lost for the Salma brothers in Southeast Asia. Okay, they tried to start a couple of separate investment funds too. Some of their graduates, whatever that means, tried to start a logistics business because they thought that was the right thing to do. I mean, here's the thing though, right? If all you're doing is copying things that other people have done, it's just never going to work. Like they did a super great job. I don't want to say lucky because you just cannot get that rich that fast if all you are is lucky. But they did really well by copying the Groupon model in Europe and then running the Groupon business globally. But there's been one more company in the fashion space that sits inside their sort of online retail business. But otherwise, right? I mean, what do they have? The GFG, the Global Fashion Group, which raised another $300 and something million in the middle of 2016. But even their companies in the Middle East are not doing so great. There's really one company that has dominated online retail in Europe, again, whose name escapes me, but it's like, I don't know, La Moda's, I can't remember the name of it, but to be fair, it doesn't matter. But otherwise, they haven't been very successful out here. And like I said, not a lot of love lost. So
what would you done if you had the access to the capital that they were sitting on and you came to Southeast Asia? What would you done differently, Michael?
Well, we talked about this. We talked about this last week, right? Or 2 weeks ago, I can't remember. Right. So I had a large Korean company come and ask me for advice. They had, hundreds of millions of dollars to spend. They'd already built businesses in Eastern Europe and in the rest of Southeast Asia, and they wanted to come into Thailand. And they said, should we buy or should we build ourselves? And I said, wait, you've already built all these businesses. You understand best practices. If you have access to capital, why would you spend it on a business that hasn't been very successful? Why wouldn't you build a business from scratch that has best practices? So if someone was going to give me $300 million or $400 million, what I would build, and it's very consistent in my opinion on this thing, what I would build is platform and infrastructure businesses where the verticals that plug into it, I'm indifferent, but the horizontal side of the business, which can then connect to any part of whatever infrastructure or ecosystem that I choose, whether it's medical, you can connect insurance to it, you can connect travel to it, you can connect hospitals to it, you can connect clinics, you can do dentistry on the other side. So if you want to build a platform that does that, I would invest in that, right? We talked about the logistics business because every e-commerce company is going to plug into it. And I would actually have started an AWS style business as well, right? For the longest period of time, you had to go to Singapore if you lived in Thailand to run your backend. But there was always latency. If somebody had started an AWS style business in Thailand or in Malaysia or in Indonesia, where it didn't have to go through the internet pipes that connected those countries, I would have built that as well. And that's not new. That's not like a new idea with 2020 hindsight. That's something that we've been talking about for years. You can look at the things into which we have invested and that we do like, and it's very consistent across the board. Build me a platform into which I can plug multiple verticals, right, in a specific sector, and I'm happy to invest in that all day as long as the management company is good, right? And also the other thing, which is slightly different to that, but not really, is meta search, right? Everyone's afraid of Google dominating the search space globally. But remember, not a lot of people search on Google on mobile. You don't see a lot of people opening up a web browser and searching for things on Google on their mobile devices. Maybe on a tablet, maybe, but not on a phone. And what you need is a meta search company. Look at a company like Trivago, started in Germany, financed by Expedia, and just it went public in December. Right? Everybody laughed at them like, hotels? You're going to do meta search for hotels? Like, that's been done. And yet it hadn't been done, because if you look on Google, and remember, Google is uniquely a search engine for web pages, not for information, right? So two problems you have. One, if you're a hotel that doesn't have a web page, you're not discoverable on Google. And two, if you're not a global chain, right, you may not have the money to buy AdWords on Google, and Google's not set up for you. Neither is TripAdvisor. What you need is a meta search company that's going to search for the best price and the best value, and they'll always list you at top, because that's going to guarantee somebody a transaction somewhere. And Trivago has done an incredible job of doing that. And you can make all the you can say all the problems you want about the fact that they spend 80% of their revenue on marketing, but they're still in growth phase. And if you listen to the CEO talk, he's wildly dismissive about people that don't think that his business is going to continue to grow. And I think meta search is something that's going to be really important in this region as well. So that's what I would have spent some of my money on.
Good. It's good to hear. I mean, if you had the assets, the capital to hand that Rocket Internet had, you're saying you invested in those sort of the infrastructure, the meta search. You wouldn't invest it in an international meal delivery company then. That's a bit unfair. I know we've had HelloFresh on here already, right? We did them a couple of weeks back, right?
It's just the barriers to entry are too low.
I know.
And you can't control. Here's the thing. I can't control the other side of the equation. I've spoken to people in the food delivery business, and they said, yeah, we're just going to build a marketplace or build a system that does this. We're going to make it more efficient and all these other sort of platitudes. And yet in the end, there's a guy or a girl on a scooter delivering a meal who doesn't care.
Yeah.
Because the only way you can get that business to have any efficiencies and make any money is by paying that person not so much money. And no matter how motivated they are, they're just not going to be motivated enough to make sure that like it's really good. I've ordered a pizza to this house so many times and they can't find it. It's taken, 30-minute delivery takes an hour and a half. I don't like the business here. The infrastructure is not set up for it. And there's no vig in it. Sorry. I can go on and on about that, but I just don't think there's any vig in it. Anyway.
I think you got to find some love for Rocket Internet. We'll have to dig deep on that one.
But I know people in this business. I talked to a guy who runs a food delivery logistics business, and I just don't like it because I just don't like it. Yeah. So I ordered food, I don't know if it was last night or sometime this week, okay? And I didn't pay for it. My friend paid for it. And afterwards, I asked my friend, like, who did the delivery? Did the restaurant do it themselves, or did they have a service do it, or was it Food Panda? Was it Foodbot? Like, who was it? Was it even Uber? Because we have Uber Eats out here now as well. And the answer I got was really great. It was like, I don't know. I didn't notice if they were wearing a uniform or not wearing a uniform. Wow. I wasn't paying attention because I didn't care. My food came, it was warm, and it was good. So there's no brand loyalty either, right?
Exactly.
Anyway, I think that's enough.
That's good. Well, exciting times. Good week. There's a lot going on in Asia at the moment, and thanks for sharing. Yeah, those new ventures, those new funds opening up with maybe a different angle as well. That's exciting. So, yes. Yeah, more of the same. Let's find out next week. What are we going to talk about? Any sort of snippets that you want to share with us to give us a taster of what will be coming up?
I don't want to give anything away, but there's always a lot of activity out here. The big surprise next week will come from the middle of the week because it always does. There was one thing I wanted to talk about in the gaming space this week, just because I'm going to get into a lot of trouble for this because I know the people involved, but I don't like. This just points back to the immaturity of stories, and I can talk a little bit about that next week. But there's a really good example of an investment that was reported but actually didn't get made, and I don't like it because I think it points to an immaturity in the market, and it denigrates the work that the rest of us are doing by saying something happened that didn't actually happen. Anyway, we'll talk about that next week.
Tune in next week. Asia Tech Podcast. Graham Brown, Michael Waits. Find us.
Anything?
Yeah.
Yep. Find us everywhere. You can find us on Instagram at Asia Tech Podcast. You can find us on LinkedIn at Asia Tech Podcast. You can also find us on Twitter, hashtag Asia Tech Podcast. You can find me on Twitter at Michael Waits, and you can direct message me and ask me any questions. If you have any follow-up, let me know. We'll answer your questions. Thanks, Graham.
Fantastic.
You're a star, man.